Hello, everyone, and welcome to episode 8 of the Nasdaq Futures ICT Weekly Outlook series. So, as always, we always start off with the economic calendar for the week to plan our week. And if some of you have noticed already, I have a few websites I'd like to share with you guys and a specific account on X that I will mention. So, now let's get into it. On Monday, we have news at 8:30 a.m. New York local time. It is a non-high impact news in orange folder. So when we have days where we don't have a red or high impact folder, I'm always waiting for at least the 9:30 open to give me some sort of manipulation or direction into the market, right? So for on Monday, I would be waiting for the 9:42 macro to execute, or around, it could be slightly before if it's a good trade. On Tuesday, we have President Trump speaking and 10 a.m. news for consumer confidence. On Tuesday, normally for the non-high impact news, like I just said, I would be waiting for the 9:30 open. But I want you guys to pay attention to one thing here. On Wednesday, the 28th, we have the FOMC statement being released. Now, the day before CPI, NFP, FOMC, I am not taking any trades because it's always highly likely that the day prior to such a news event, like an interest rates being announced, then it tends to be a very choppy day. So I will be avoiding Tuesday. On Wednesday, I will also be avoiding the AM session, and I will be watching to see what the interest rates will be doing, but more than likely Wednesday as well, I will be not taking any trades. And if I were to take any trades, as you guys can see, there are two news announcements here. What you want to do is wait for both of them to be released, and then wait for at least the 2:45 to 3 p.m. macro going into the last hour of the day. Now, again, you don't have to be trading this day if it's not part of your time zone, or for whatever reason you can't be at the charts. Just go ahead and take that day off. So you can have essentially 2 days off this week. I want you guys to view this as you had a job, you can choose your income, you can choose your work hours and your work days. You wouldn't mind taking 2 extra days off a week from your current day job if you were thinking about it. So don't force yourself to take trades in an environment that isn't going to be high probability. That being said, the next day on Thursday, we have unemployment claims. This is 100% a full trading day after all this announcements in the beginning of the week. For this news here, we have 8:30 New York local time. I'll be waiting for, again, the 9:30 to 11:30 time window to take any trades. On Friday, we have 8:30 news as well. And same thing applies. I will be waiting for the 9:30 to 11:30 to take any trades. All right, so now let's get into the websites that I have here for you guys today, just to have some clarity on where the markets are going and what may happen and whatnot. So the first one that I want to go over is a website from the CME group here, as you guys can see. It is the FedWatch tool, right? So when you come to this website here, it tells you when the next FOMC meeting is going to be. This is the actual interest rate announcement. There's an FOMC announcement rate, which is the one that we're going to have in 2 days, as you guys can see here. And then we have FOMC minutes meeting. That one isn't as detrimental to the market as much as this FOMC meeting is. So here, when you scroll down, we can see that they have all the next interest rates that are going to be for the year of December and even going to 2027, right? In my few years of trading that I have now, I have yet to see this website be wrong. And go ahead and do that research for yourself. But this is the actual CME group, the one that provides some of the data for the futures market if you guys are trading futures. They're yet to be wrong. So right now they have it at a 97% rate that they are not going to change the current interest rates. So that's a little tool for you guys, and you guys can do with that information as you please. And now the second one that I want to point out here is equityclock.com, right? So when you come to this website here, ICT himself has mentioned this website before. If you guys have actually watched his content on his YouTube, if you haven't, I'm not sure what you're doing watching an ICT video. But with that being said, this website, I like to use it just to see when certain seasonalities, as you guys can see, it gives you the seasonality for the Nasdaq futures contract for and the relative to the S&P 500 and gold for the past 20 years. This is proven on data here. You can go through the website here. You can see for forex, indices, commodities, futures. You can see for everything here. And as we know, the futures market or the US markets are an asset that's meant to go up, right? Every single year. But certain points in the year where you can look for certain things, right? January tends to be an continuation after this somewhat low here that is created in December, right? And if you guys go look at the current charts, something similar has happened to that. At the current moment, we're kind of in a bit of a consolidation, but in my opinion, we're going to continue higher. And as you guys can see, there's a low that is somewhat formed here in January that continues into February. And based off the seasonality chart, there tends to be another low form. It doesn't mean that there's going to be like this much of a movement and that has to look exactly like this, right? It just means that January tends to be slow, but then starts to move for an expansion into February. And then February tends to pull back, doesn't have to be all the way back. And March forms another low to continue throughout the rest of the year, right? And currently on the charts, in my opinion, we are about to perform this seasonality. And lastly, the last, not necessarily website, it is on x.com. I'm not even sure if I can say this on YouTube, but this is 100% all for the earnings whisperer. I do not take any credit for this. This is free on x.com. You guys can see this for yourself. This is another earnings calendar that I like to look at. This one is more visually pleasing than the last earnings website that I gave you guys. And this one shows you the ones before and after the close, right? And when you were looking at the stock market, the earnings reports that I like to pay attention to are the ones specifically for the Magnificent Seven stocks, right? You guys can go ahead and Google those 7 stocks, but some of them are in the earnings report for this week. And coincidentally, it's on Wednesday where we see Microsoft, Meta, and Tesla having earnings report, and they are 3 of the 7 Magnificent Seven stocks that also include Apple, Nvidia, etc. Now, when we see this happening after the close, and then you have an FOMC announcement for the interest rates on the same day within the same few hours, more than likely you're going to see some crazy movements. So again, that is just another reason to take it easy on a Wednesday and 100% avoid Tuesday. Everyone can give you a strategy about when to enter and how to do this and that, but I don't see many people telling you when not to trade. Create a protocol and stick to that protocol, guys. And that's how you can actually make this consistent. Now, with that being said, let's go ahead and get into the charts. All right, here we are on the E-mini Nasdaq 100 futures March 2026 contract on the daily time frame. And as you guys can see, we had a initial close lower underneath this BISI to reach a certain discount here that I called in the last weekly outlook series that I'll be going over as well. And now we have closed back above this BISI that I said that if we were to be able to come back above this BISI, then I would see that the buy program is back in play. Last week I had said it was possible for us to seek lower and to further discount, maybe even take this previous monthly low, and then from there that we would be able to move forward. And then the second scenario I said is that we could come lower to form a low to then get back above this BISI to then continue higher. And that is exactly what happened. We have now pretty much completely filled this new week opening gap for last week. And right now we have another new week opening gap that quickly opened lower and is not continuing higher. So in my opinion, until we invalidate this BISI again, the buy program is still in play and the targets are the same to fill this volume imbalance completely and to reach this CB. That's what I expect for this current week. If it wants to be super overzealous, we have the all-time high for a second time base liquidity to target. Now let's go ahead and drop down into the lower time frames and I can explain things a bit more. All right, here we are on the 1 hour time frame. As you guys can see, this is a much more detailed look at what happened for the first week or the first half of last week, right? We had the new week opening gap here. That was a huge new week opening gap that pushed price lower. This specific line here is the medium threshold on the daily time frame, so you can go ignore that. Here, right? So the new week opens, comes lower, comes back into the daily busy. This is the daily busy here. Uses it as resistance on price to seek that first PD rate that I had gave, right? And then we come back and essentially chop around from here to here. Now on the 21st of Wednesday, I had gave a specific point of interest here. I was using this CIBI. Go ahead and highlight that for you guys real quick. So on the 21st, during the London session, there was a specific move here that I seen that I was very possible to happen, especially because of what had happened. And I will go ahead and show that slightly later here. But I want to point out this imbalances here, this sequence of imbalances. If we go into the 4 hour time frame, as you guys can see, it's a busy here that was resting slightly above the previous monthly low. And I had said that as a potential target, and that if we were to reach it and then use it as resistance on price, that could be the following target. But I had said that this is a specific discount array that I was aiming for, right? So every new discount array that we had reached is a new A to B. In other words, guys, that's how you should be viewing this, right? So let's go back into the 1 hour. This being A, and these two being B, right? A to B, once we got lower, A to B, right? If it doesn't come below, this becomes a new A to B, so on and so forth, right? Show you guys a little proof what could happen in the being part of the private section of the Market Maker School. I'm gonna go ahead and show you guys our Discord real quick. Okay, so this is a picture that I had sent to the chat prior to the expansion lower that we have seen here in hindsight. There was SMC at the high. I'm here noting that SMC must hold. This is the 1 hour busy from the outlook I had gave, just like I mentioned. And then this is a busy formed on the 4 hour on December 18th. And I was telling them that that is what I was targeting. Now, if you go back into the charts and see what happened, that is exactly what happened. And then here, as you guys can see, we scroll lower into the trade chat that we have here for the private members. Here you can see me execute, exit, execute, and exit again. A to B, and then a new A to B. Day in and day out, they cannot hide this sequence from us. Now let's go back into the charts. So here we are back on the 1 hour time frame. And the week has opened lower. And like I said, until the daily invalidates this 1 hour busy, I expect any retracement lower to be that. A retracement to form some sort of manipulation to then continue higher, right? Once we start closing above this busy, as we do here, I would like to see this busy hold as support. And then the next price I want to see as reach would be here. And this is the exact same point of interest that I gave for now weeks. As you guys can see here, I'm using these over and over and over again on the charts. They hold true, and this is proof that these PD arrays that I'm choosing and the points of interest that I'm choosing are still holding price as true support and resistance. In my opinion, that is what ICT was trying to teach us. Support and resistance based on logic. Everyone can look at a chart. You can give 100 different people a chart and tell them to draw support and resistance lines everywhere. Every single one or majority of them are going to have different point of interest. Whereas if you abide by the logic that we and myself are teaching here, there's rules to why we choose this specific CIBI, this specific busy, etc. There's a narrative and a logic to everything that we're doing here. So with that being said, guys, Monday is a trading day. Take it easy. Take Tuesday and Wednesday off. If you need to, come back on Thursday and Friday ready to execute. Good luck and good trading this week. Take a screenshot, watch this video over and over again, have the same point of interest on your charts. They can come back to any one of these points of interest here. And 1 minute, even though it's busy here, is good to be paying attention to. Again, I'm aiming for this daily CIBI as to be the draw for liquidity on the week. Good luck and good trading from everyone at the Market Maker School.